Good morning. This is Tejas Sarate bringing you today's pre-market report. Firstly, before I tell you about today's condition, let me tell you over the past few days, what has been the market sentiment and so. See, India's stock market correction presents a strong buying opportunity, okay? Despite concern over growth, sustainability, retail investors' behavior, and high valuations. While the slowdown has unsettled markets, factors such as increased government expenditure, RBI liquidity, and easing regulatory pressures are expected to drive the recovery. Most reasons for the slowdown are now behind us, and the fundamentals do not justify a major deterioration in the market sentiment. A proprietary sentiment indicator has entered the buy zone for the first time since mid 22, signaling potential upside. This is a very big sign that since mid 22, first time we are looking at a major buy zone now. However, risk remain and including policy missteps, a deeper US market correction, and slow global growth. Private financial stocks offer the best risk reward ratio, as we all know, in the current environment. While retail investors have shown, resilience, the price decline has been, driven more by lack of bids than aggressive selling. This suggests, me that the investors are waiting for the right moment to re-enter rather than exiting in panic. So, as economic conditions stabilize, confidence will likely return, and that is what we know, and making this an ideal time to invest with a long term perspective again, just like before days. Coming to today's condition, the gift Nifty is indicating a flat to positive opening for the Indian markets today, 29th of Jan. All eyes are, now on two major events, the FOMC meeting tomorrow and the Union Budget 2025 February 1, which are expected to drive market movements drastically in coming days. Last night, US markets closed in green, with the Nasdaq leading the rally as tech stocks, including Nvidia, Apple, bounced back strongly. Apple's shares have been surged around 3.8 to 4 percentage out of its quarterly results later this week. The S&P technology sector, S&P 500 technology sector, saw a sharp rise of around 3.5 to 3.6 percentage, marking its biggest single day rise since July 31. Meanwhile, European markets have been always ended mixed, just like many days, and reflecting cautious sentiment for us today. On the technical front, Nifty is struggling to sustain above 23,000. Yesterday, also, if you have seen, the last candle on the hourly chart has been bearish. On the day formation, there was a doji candle, okay, on the index, which suggests both buyer and sellers. That means there is indecision between bulls and the bears. Sustained close above 23,000 could push Nifty towards 23,200 very easily and 23,300 thereby. But if it remains below 23,000 level, we may see consolidation or a sideways movement with basic support at 22,800 and 22,750. The broader range for today is again expected from 22,800 and 23,320 for now. If I talk about market volatility, it remains high with India VIX rising to almost 18.5% now this week. And as we approach the union budget, VIX is expected to stay elevated, increasing uncertainty in the market and increasing the volatility. Nifty is currently, below all major moving averages, and the shorter moving averages crossing below longer ones indicate a bearish setup. The relative strength index stands at 37.74, signaling a very weak momentum as of now. Unless the budget surprises us positively, we expect Nifty to test 22,786, followed by 22,500 very soon. Yesterday, the Indian markets, rebounded, ending a two-session decline, and the Nifty 50 closed at 22,957, 128 points, above from the day's start. While Sensex has also gained 535 points to the close, despite intraday volatility, and the market held its gains, indicating a short-term strength. If I talk about the US Fed's policy meeting, it kicks off today with expectations that, the interest rates will remain unchanged. Key earnings to watch today include Adani Power, Ambuja Cement, Bajaj Finance, and Zindal Stainless, Jupiter Wagons, Maruti Suzuki, Radico Khaitan, Raymond, and Tata Motors. In the IPO market, today I saw the newspaper Economic Times. Dr. Agarwal's healthcare IPO opens for subscription today with an issue size of 3,027.2 crores, and with a price band, roughly ranging from 382 to 402 rupee per share, which is a huge gap, between the price range that we are looking at. Denta Water and Infra Solutions is set to list after massive 222 times triple two subscription rate, with NIS subscribing, at 507 times. FIIDI activity remains very strong, with FI selling 4,920 crores in cash, while DIIs bought 6,814 crores, helping the market recover. See, FIs were net sellers in index futures around 490 crores, but bought heavily in index options, and around 4,200 crores of index options were bought by FIIs yesterday. Stock futures have, also seen a buying of 2,515 crores, and stock options were bought for 226 crore. While a monthly expiry, approaching the union budget just a few days away, expect increased volatility. Traders should remain cautious, focus on the risk, and stay tuned for more updates. Thank you. See you tomorrow again.